Good afternoon, a warm welcome to everyone. Welcome to Bank Millennium first Q23 results call. With us we have Mr. João Brás Jorge, our CEO, and Mr. Fernando Bicho, our CFO. The structure of the call will be as per usual. We will start with approximately 25, maybe 30-minute presentation, and then we will be available for questions. Thank you very much. Over to you, Fernando.
Thank you. Good afternoon. Thank you very much for again attending our quarterly results presentation. We start with a snapshot of the main key profit and loss items and balance sheet items on pages 5 and 6 of the presentation, where it is visible the strong improvement in the recurrent results of the bank, supported by a significant increase of net interest income year on year, and also the resilience of this net interest income that, without the impact of the credit holidays, still grew 1% quarter on quarter. On the other side, costs are growing, but still below inflation. And also we had a first quarter that was marked by two important events. One was the conclusion of the insurance transaction, about which we reported several weeks ago, that translated into a significant capital gain. And on the other side, also significant provisions for FX mortgage legal risk, including one extraordinary adjustment. All in all, this allows us to reach a net profit in the first quarter of 252 million zlotys, and this marks already the second consecutive quarter of positive results. Excluding extraordinary items, we also see the resilience and the capacity to originate organic results by the bank, with the net profit excluding extraordinary items reaching 672 million zlotys in the first quarter, at a similar level of the previous quarter. As a consequence of these movements, we had the continuation of significant improvement in the cost-to-income ratio. The cost of risk stayed within the range guidance that we had provided previously, and on an adjusted basis, of course, return on equity was already double-digit, even above 20% on an adjusted basis. On the business line front, we would highlight the significant and sustainable increase of acquisition of customers, and where we are approaching the 3 million mark for active retail customers, which is being followed even at a higher speed by the increase of the digital and mobile customers. Deposits continue to grow, especially driven by deposits from individuals, while total loans decreased, mainly due to the significant decrease of the FX mortgage loan portfolio, also because of the deduction of the provisions that are being created. And so without this impact, the loan portfolio would have been flat. Finally, to highlight is also the resilience of the capital base of the bank. There was a minor decrease of the capital ratios in the first quarter, but they stood still comfortably above the minimum regulatory requirements. The page 7 is just again a highlight of what I have just mentioned, so I will go directly to page number 8, where we can see the evolution of the quarterly results of the bank in recent periods, where it is visible this gradual increase of the net profit without extraordinary items, which stabilized at 672 million zlotys when compared with the fourth quarter of 22, but is 37% above 1 year ago. Moving to page 9, the revenue improvement continues to be driven by net interest income, which grew 31% year on year and 1% quarter on quarter. As it is visible on the top right graph, we still had an increase in the average remuneration of loans in the first quarter of the year, but also still an increase, although at a slower pace, of the average cost of the deposits. And this happened already in a context where, although the reference rate from NBP stayed at the same level, we saw already some decrease in the level of the main reference rates, mainly the level of the VBORs is already lower than what it was in previous 2 quarters. The combination of these factors translated into net interest margin of 4.58%, only slightly down by 5 basis points versus the fourth quarter of 2022. Regarding net fee and commission income, here the picture is stable. The level of fees and commissions were at the same level of the previous quarter, although 9% lower than 1 year ago, mainly due to lower fees that were temporarily in force during the pandemic times and are no longer being charged regarding part of the accounts. But we see some positive developments in several other lines of fee and commission income, namely payment cards, and also we see rebound already in the investment loan balances in the investment funds balances that sooner or later will translate also into some increase of fee and commission income. Moving now to the cost side, the total costs are growing clearly below inflation, 7% growth year on year. Of course, the first quarter is inflated by the initial preliminary booking of the contribution to the resolution fund that we created at a level similar to last year, although as we disclosed yesterday afternoon, based on the communication received yesterday, actually the figure is lower. So this correction, which in fact is a reduction of cost, will be reflected already in the second quarter. Anyway, looking at the concrete drivers, we continue to have more pressure in terms of staff costs, which we believe is something that is common to the market, and this translated into a growth of personnel costs by 12% year on year, while other admin costs grew 10%. At the same time, we have continued the fine-tuning of branch network, as we have been doing in recent periods. Moving to asset quality on page 11, we kept a strong quality of the loan portfolio, NPL ratio at 4.7%, slightly up versus the previous quarter, but also we cannot forget that actually the loan outstanding balance was lower versus previous periods. Looking at the cost of risk, it stood at 63 basis points over total loans, exclusively driven by retail loans. But still, and this is exactly within the range guidance that we have mentioned during the previous conference. Additionally, also, we should highlight that in this quarter, the cost of risk was not supported by sales of NPLs. Regarding liquidity and capital on page 12, liquidity remains very, very solid, with a loan-to-deposit ratio at 75%, LCR at 228%. And regarding capital ratios, as I mentioned in the introduction, we have a resilient capital position, a minor drop during this quarter, but still comfortably above the minimum regulatory requirements, more than 80 basis points above the minimum regulatory Tier 1 requirement, and clearly more than 1 percentage point above in terms of the total capital ratios. And of course, just for clarity, these capital ratios do not include the net profit generated in the first quarter of the year. if such net profit would be considered as part of the own funds of the bank, the capital ratios would improve by approximately 50 basis points. Moving to the FX mortgage portfolio on pages 13 and 14. So first of all, we had the continuation of the effort that has been done already for a long time of significantly decreasing the FX mortgage portfolio. And as it is shown here, in the quarter we had a reduction in Swiss franc terms of 4% of the gross portfolio, so without deduction of the legal risk provisions, and year-on-year of 16%. As a consequence, the percentage of FX mortgage as of the total gross loan book continues to decrease, and it's already around 7%. At the same time, we continue to increase the provisions against legal risk, as we disclosed already 3 weeks ago in a specific current report. We created 821 million zlotys with P&L impact for the Bank Millennium originated FX mortgage portfolio, including one extraordinary adjustment of 337 million zlotys in anticipation of some deterioration of some parameters connected with the FX mortgage legal risk. The combination of the creation of these provisions and the decrease of the loan book brought the ratio of total provisions against legal risk versus the gross FX mortgage book to close to 56%. During the quarter, we continued the effort to reach amicable settlements with our clients. This quarter, the total number was 806, so lower than previous quarters, as, by the way, we were somehow expecting because of the significant number of settlements that were done during the previous 3 years. And as a total, in the last 3 years and 1 quarter, we have done close to 18,600 amicable settlements with the customers. The lower number of settlements in this specific quarter, of course, also brought lower costs of such settlements through the P&L. Moving now to the second part of the presentation regarding the business development. The main highlights are on page 16. So a solid growth of retail deposits by 9% and overall deposits by 4%. A strong quarter in terms of cash loan sales that grew 10% quarter on quarter. Also significant growth in the number of payment cards by 214,000 year on year. And then this permanent growth in the number of active retail customers and active digital customers, where we are approaching the 3 million threshold. More details can be seen on page 17. So the loan portfolio on a net basis, so after deduction of all the provisions, decreased by 4% year on year. This is to a large extent due to the additional provisions for the legal risk that have been created, because if we would exclude the FX mortgage portfolio, the loan portfolio on a net basis would have remained flat. Customer deposits, as I mentioned, growing solidly by 9% year on year in terms of the retail deposits. The structure of the loan portfolio continues to change with the dilution of the FX mortgage portfolio. And in investment funds, some positive signs already in the quarter with the growth of the assets under management, but still with a decrease of the outstanding by 13% year on year. More details on the retail performance on page 18. I already mentioned the strong quarter of cash loan sales, which when compared with 1 year ago, grew by 35%, while mortgage production remained at a lower level, as it is, let's say, common to the market, with total disbursements at 925 million zlotys at similar level of the previous quarter. When we look at the evolution of the retail portfolio on a gross basis, it is visible that the consumer loans still grew by 1% and PLN mortgage by 2%, while the FX mortgage had a significant decrease. The solid business performance of retail is also illustrated on page 19. A growth of 36,000 active customers in retail in the first quarter, 183,000 more versus 1 year ago. Then also an increase in the growth of micro business clients versus in the last 12 months, and followed by a significant increase of the number of current accounts by 200,000 and the number of debit and credit cards by more than 200,000. The digital journey continues to gain traction. On page 20, we once again illustrate very strong numbers in terms of usage of digital channels with 2.6 million active digital users, 2.32 million active mobile users, with a significant share of online sales, 80% share in the sales of cash loans. In the first quarter 2023, 96% in the sales of term deposits, and also 43% share in current accounts acquisition. And page 21, also additional figures which we would particularly highlight the significant number and growth in BLIK users and BLIK transactions. We continue to support this growth with a permanent effort to assure convenience and security every day to our digital users. Illustration of this effort is shown on page 22, also with the pilot phase of the buy now, pay later payments, new services with payment cards, and on page 23 with a number of other features that provide convenience to customers that are running their own business. And on page 24, the continuation of the development of our Goody smart shopping platform, in which we have an increase of 50% year-on-year of the number of active cashback users. Moving to page 25, the corporate business activity has been conditioned by also the strict management of the capital consumption, especially, so it means strict management of risk-weighted assets, and this, as a consequence, limited the growth of the corporate loan portfolio. So when we compare with the previous quarter on a gross basis, loans to companies only grew 1%, while when compared with 1 year ago, they fell 2%, and this includes, of course, not only loans to companies, but also leasing and factoring. On the other side, we had year-on-year some contraction of the deposits due to high base of 1 year ago, but with a rebound of 5% quarter-on-quarter, with a good mix between current accounts and time deposits. We also continue to focus on gradual improvement in transactional activity, which is illustrated by the growth of 6% in FX transactions. And regarding also the lending activity, the focus on utilization of BGK guarantees to the highest level ever, in our case at 3.9 billion zlotys, including our leasing company that is the only one in the market for now with active sales of BGK guarantees. On page 26, regarding leasing and factoring, we had a decrease of sales, leasing sales by 9% year-on-year, although the portfolio, as it was shown before, on a gross basis year-on-year still grew by 2%. And in factoring, a marginal drop in factoring turnover by 2% year-on-year, and in FX transactions, a growth by 6% year-on-year. The effort to provide innovation and convenience for our corporate banking customers is also illustrated on page 27, where we have been keeping the expansion of the offer for corporate clients, including loans for photovoltaic installation and technological loan, and also bigger availability of CDMs throughout the country. So in summary, these are the results of the Bank Millennium Group in the first quarter of 2023, and now we are available for your questions. Thank you.